Hey there YouTube. So in this video I wanted to address a common question I get, which is, do I have to pay taxes if I reinvest my dividend income? And so what we're talking about here is you have just a regular brokerage account. So you have stocks that pay out dividends and you enter a dividend reinvestment program. So the dividends are automatically rolled into buying new shares of that same stock. And this is a regular account. So this is not an IRA or a 401k or anything like that. It's just your standard brokerage account. Well, the short answer is yes, you still have to pay taxes on those dividends. And here's why. I think the common misconception is thinking, well, the dividend is being paid to me, but I'm never actually seeing it, right? So it's never being deposited into my account. It's just being rolled into new shares. So because I guess I don't have access to the money, it's not income to me. And that's, unfortunately, for federal tax purposes, that is not the standard, right? You're still subject to taxes because you're still getting a cash payment of the dividend earnings, right? Whatever is being paid out. But it's just being automatically reinvested. So the broker or the company is just taking out the effort of you having to actually log into your account, use the proceeds to buy new shares. That's effectively what's going on here. It's just being streamlined. So if you do have a dividend reinvestment program on one stock or all of them, the dividend income is still going to be reported to you. It's still reported to you on a 1099 div form, and you got to report the income on your Schedule B and pay taxes. Now, the appeal with the dividend reinvestment programs are, one, it does work kind of like compound interest, right? Because you're reinvesting in the stock, buying more shares, so you get more dividends as time goes on. The other appeal is generally there's lower transaction fees, right? If you were to just take the cash and then buy new shares every time you got a deposit every quarter, the transaction fees can add up quite a bit. A lot of brokers and companies, when they have these programs, they'll allow you to reinvest the proceeds for either no transaction fees or very nominal ones compared to what the standard fee is. And so that's why it appeals to a lot of taxpayers, because one, they can grow their portfolio by reinvesting in the stock, and then also they can save on fees. So if we look at an example here, we have John. He owns 1,000 shares of company XYZ Inc., pays quarterly dividends at 25 cents a share, right? So each quarter John gets $250. And the total annual dividend is $1,000. Now, if John decides that he wants to enroll in the dividend reinvestment program, the cash dividends being paid out are automatically invested into new shares, right? Rather than the cash actually going into his cash account. So in the next quarter, let's say the market price is $25 a share. When John gets his dividend payout on the 1,000 shares, the company's automatically going to buy him 10 additional shares, right? Because he gets $250 in dividends divided by the current market price at $25 per share, right? So his total stock ownership is now going to be 1,010 shares, right? He's got 10 shares that he just acquired plus the existing 1,000. Now, as John accumulates more shares through the program, the broker, again, it's still going to report the dividends on a 1099 div, which he's got to report on his Form 1040 tax return, right? So put it on Schedule B, and ultimately it flows through to page 1, and you're paying tax on it. So if we look at the dividend and distribution schedule, the dividends, whether they're paid to you in cash and they hit your cash account, or they're paid to you and they're reinvested as dividend income, they're still going to be reported up here, right? It's still going to be an ordinary dividend, even though you're not getting the cash. And then it will be qualified depending on your holding period for the company stock, right? So in this case, John, he got his $1,000 and it was reinvested. He still gets qualified dividend treatment because he's held the stock for a long time. There might be some disparity there for the new shares, right? As you start to acquire new shares, the holding period is going to be different for those newly acquired shares. But long story short, you're going to get something like this. It still goes on your Schedule B, right? So if you're a taxpayer and you do that dividend reinvestment program, do not think that you're not paying tax on it because you've invested in that automatic program. So that covers it for this video. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again in the next video. Thank you.